So we're talking banking, and most people don't know what FDIC insurance is, what it protects, or how much money of theirs is actually covered at their bank. So if your bank were to fail tomorrow, how much would you get back? Let's find out together. So we could type in FDIC insurance, and this is how you could verify for yourself. I'm an advocate of that. Don't just trust what people say on the internet. So what FDIC stands for is Federal Deposit Insurance Corporation, and what it protects is your money in case the FDIC insured bank fails. So they have to be a FDIC insured bank. You can look around for signs around the bank, or you could simply just ask. And what do they protect? Well, they protect, over here you can see on the website, checking accounts, savings accounts, money market accounts. You got your CDs, certificate of deposits, and that's it. What FDIC insurance doesn't cover, and there's a specific insurance for these, I'll cover that in a later video. Think your mutual funds, your annuities, life insurance, bonds, stocks, crypto, and contents inside of safe deposit boxes, or losses due to fraud or scams. So only deposit accounts at FDIC insured banks, just to confirm that you got a quality bank you're working with, and not all financial institutions are FDIC members, so you always want to verify that. Now, let's talk numbers. The standard FDIC coverage limit is $250,000 per depositor, per insured bank, per ownership category. And of course, verify this information. I'm just a guy on YouTube. That's your disclaimer. Ask your banker. And then you just seen how you could verify on Google. Look it up. So let me break it down. So if you have a single account in just your name at one bank, you're insured up to $250,000 in total across all accounts. So FDIC doesn't mean we protect it per account. At that bank, $250,000 total, depending on, it doesn't matter how many accounts you have, only $250,000 is covered. So if you have $150,000 in a checking account and $100,000 in a savings account, that's covered. But if you have $400,000 in cash at the same bank under one name, only $250,000 is protected. Now, here's the part that people don't know. There are ways to increase your FDIC insurance without actually having to switch a bank and start a new relationship and have your money spread all over the place. Here's one of the ways how. You can add a joint account owner. So joint account owners are insured up to $250,000 per owner. Verify this, like I said. But so a joint account with two people gets you up to $500,000 in coverage. But remember, they do equally own the funds at this case. The second is to open accounts under different ownership types, maybe a business account. Well, I guess that's a little iffy though, because technically you still own that. Maybe ignore that one. But FDIC insurance applies separately to different categories. So you can get $250,000 in a single account, $250,000 in a joint account, $250,000 in a trust account, $250,000 in a business account. But remember, check your banker on this stuff and verify the current laws. If you're a sole proprietor or LLC, those are just some things to consider. All in the same bank and all separately insured, assuming that's what the current laws are. Then the third one would be to convert your account to a revocable living trust and name some beneficiaries. Each beneficiary gives you up to another $250,000 in coverage up to the current FDIC trust limits. So let's verify this one together. I'm an advocate of that. So let's just type in FDIC trust limit. And then let's see what pops up. We're doing this together. Hands-on approach. So then you could read through all of this. We're going to scroll down. Actually, let's go back up. We got this disclaimer to read. This section explains FDIC insurance coverage for trust accounts and is not intended as estate planning advice or guidance. Depositors should contact a legal or financial advisor for assistance with estate planning, which is not Joel. So right here, if you scroll all the way down, you can see this little chart, and you can see that these beneficiaries, You can add up to 5 or more beneficiaries, but once you hit that 5 mark, that's where it caps out at 1.25 million, or 1,250,000 is insured. Next, consider cash sweep programs. Those are ways to also get around it. These are offered by some investment platforms, some banks, brokerage accounts, where your cash is spread across multiple partner banks, automatically keeping each chunk below the 250,000 FDIC limit threshold. Even though it's one account from your perspective, it's technically protected across several banks and the FDIC coverage stacks. But again, verify all of this information with a legal professional, your banker, financial advisor. Just verify, due diligence. But some sweep accounts can insure millions of dollars this way. And also you can always open accounts at multiple FDIC insurance banks. The big downside with this one though is that you got banks all over the place. That's another drive, and it's just a little bit more of a hassle that way. Each bank gives you a fresh $250,000 FDIC limit, so spreading deposits across multiple banks is a simple way to extend coverage if you don't want to pay the legal fees to write up a trust, or you don't want to add a joint user to your account who equally could own your funds. You got to make sure you trust these people. But just remember, the FDIC limit isn't per account, it's per depositor, per bank, per category. So having 5 savings accounts at the same bank still caps you at the 250,000 total. You got to remember that. 250,000 total according to the local laws and what those current limits are. Right now, July 6th, 2025, that is the number. So if your deposits exceed those limits, use a combination of the strategies I just gave you: joint ownership, trust with beneficiaries up to 5, remember that, and verify yourself. And then different ownership types, cash sweep programs, and multiple banks. Those can all exist to protect you, but you have to know how to structure your accounts to get the full benefit. If any of this helped you, if it's valuable, like, subscribe, check out my Banking for Beginners playlist. I cover everything from checking accounts to overdraft traps, how to avoid holds, credit recovery. Let's keep your money safe, smart, and working for you together. I'll see you next time.